in Davos. I have with me Kumar Mangalam Birla of the Aditya Birla Group to talk us through his view of the economy, his view on commodities, and of course his growth plans. Mr. Birla, thank you so much for joining us.
Thank you.
A quick overview of how you see both the global economy and the Indian economy before I get into more specific questions with you.
So the global economy, of course, has been impacted very badly first by COVID and then by the
Sure.
war. If I remember right, I thought IMF had forecast growth of 5.5% for 22, which is now down to 3.8%.
Globally, yes, yeah.
The Europe is in a bad shape. I think growth forecasts for the advanced European economies are down by 1%. The emerging ones are down by 1.5%. Some European economies may not just grow, I mean, actually contract in the next few quarters. So obviously, not a good time. You're seeing, if I remember right, 9 central banks in the last 4 weeks have increased rates. The increase by Fed has been the highest it's been in the last 20 years. You're seeing energy prices go up. You're seeing commodity prices go up. You're seeing inflation go up. Uh, Metals, sort of all driven by the fact that Ukraine and Russia are at war, and there seems to be no end in sight. So, for example, I didn't know, frankly, that Ukraine is such a huge exporter of food
Mm.
to the rest of Europe. I didn't know that Europe and Russia and Ukraine together constituted such a large part of wheat trade globally. So obviously, it's dire trying times. I think India stands out just now because we are by far the fastest growing economy. We don't have any structural issues. I think inflation is at about 7%. Government seems to have moved quickly and taken steps to contain the inflation. And of course, you've got to see what they're doing in the context of where the world is today.
Of course, yes.
Of all the people I've met in Davos the last 3 days, I don't think anyone has spoken anything that's negative about India. Everyone's happy to invest in one form or the other. Um, of course, it helps that other countries are out of favor for one reason or the other. So I think it could well be our time in the sun.
Okay, well, let's hope that is the case. It could also be, it is also for many of your businesses, their time in the sun right now, given where commodity prices are. What is your medium to long term view on where we are in what Goldman Sachs has called repeatedly a super cycle? And whether we're at the mid of it, at the peak of it, and what the
I
next two
wish
to
I
four
knew, Menka,
years?
but I think it's something that
But you've been through enough cycles to now be
uh,
able to gauge how
so
long these
commodities
last, right?
are always a cyclical play, right?
Yes.
You make money when, in a sense, when the cycle is up, and otherwise you work to be, uh, the last man standing,
Hmm.
which is true for all of our businesses.
Yeah.
You just have had these, interest rate hikes in the last 4 5 weeks. One has to see the impact of that. Obviously, it'll affect commodity prices. Um, so there's a huge macroeconomic layer to it, which one has to really see how it plays out. Very difficult to take a call on commodity prices in the medium to long run. I don't know if anyone can do that because there's just so much of flux happening just now.
Okay, but you have aggressive investment plans, like I know, for instance, in aluminum, for a variety of reasons, not just an upcycle reason. I think the world is moving towards, larger uses of that metal. But you have an over $2 billion investment plan there, and for a variety of your different
Yeah, I think
businesses.
that's a
So,
very good question. I think that's to do with the time horizon of our investment. Obviously, we're looking at 10, 15 years
right,
when you're building a new, an
facility,
industry or
yeah.
growing in an existing industry. We are actually looking at multi-decadal sectoral trends when we make an investment. And therefore, to some extent, what's happening on the top is a little bit like frauds. Not that it doesn't matter,
Sure.
but if it's something that fundamentally alters the economics of the business, then sure, it is very important. But I think business needs to look beyond that. If you want to really build businesses for the long run,
Hmm.
which are fundamentally strong and competitive globally, then I think you've got to take a longer term call. Uh, I don't think that anything here is going to fundamentally alter uh, the attractiveness of following into or increasing your investments in a particular commodity. I could be wrong, but I mean, who thought that metal prices would go up so much?
True.
Who thought that there'd be a war that would last for this long? I mean, we thought it'd be 10 days and it'll be over. Who thought that 75% of the provinces, in terms of their contribution to China's GDP, would be shut for so long? I mean,
Yeah.
it's incredible. 300% rise in the global freight index. So it's thrown business out of gear. But you have safety nets that you've got to build for yourself. And like I said, it's about taking a longer term view of business. Of course, there's always disruptions. We've seen it in the past. This is perhaps much more significant than anything we've seen, at least in the last 2 decades. So, I mean, one can go into a freeze mode and say we'll wait and watch. I think the fact that we hardly have any debt in our businesses
Right.
helps. It gives us that much more of firepower and that much more of headroom to grow. We are really not impacted by interest rates going up because the debt we carry on our books is so sort of manageable. As a group, our debt to EBITDA today is less than one, which is um, very strong. So I guess it's more about taking a longer term bet, but very difficult to say how it actually move. I don't think there's anyone who can make a prediction or a forecast, especially not now in the middle of so many moving parts.
I get that. But it does help solidify certain investment plans that you would have been making. And then when you come to a point where consumption has, changed dramatically or pricing has changed dramatically, that sort of sharpens the focus. So where are you putting most of your growth bets right now? I know aluminum is one
So
obvious
across
clear
the board, I
area,
think we're looking at
but
investing in aluminum, in cement, um, in financial services, in fashion retail. We are investing in carbon. It's almost across the board. Um, we're also looking at some new businesses, digital being an important one. Still studying it, trying to understand if we should go into it, not go into it. Can we actually compete and win? What's the best form to get into it for us? Um, so there's lots in the pipeline, but we're always, as of now, given the fact that we're in a position where uh, we've we've gotten deleveraged faster than we had anticipated.
Mhm.
We have, unless I grow, I'm not utilizing my equity, so to speak,
Absolutely.
efficiently enough.
So what is the current investment plan in term towards growth? I mean, I know for Novelis it
So it's
is
about 7 billion for India.
okay.
It's about 3 billion for overseas. A large part of that is for Novelis.
Novelis, yes.
We've just announced a $2.5 billion rolling capacity greenfield in Alabama.
Mm.
So there's lots of action.
And of that 7 billion in India, sorry to interrupt you, roughly what's the allocation, Mr. Birla?
So it would be
Cement is
across. It'll be cement. It'll be aluminium. It'll also be in chemicals and specialty chemicals.
okay,
We have already forayed into real estate,
and paint,
which is interesting. Paint, which seems to be like a natural foray for us.
right?
Yeah, and there are other pipeline plans in the pipeline.
Sorry, you were saying something before I interrupted you to get a breakup of where your big bets are. Were you finishing a
So
thought?
it'll basically be spread across these businesses. I don't remember off the top of the head,
Got it. Yeah.
but it's across the 7 billion I talk about is across our existing businesses, and I think we have headroom for a lot more, for which we have to come up with plans for growth.
And those plans would be adjacent businesses to the existing ones,
So
or you might be even considering completely new
I
ones
think
altogether.
adjacency should always have first priority
Okay.
if they make sense. Otherwise, we're always open to new businesses.
You mentioned digital, so I'll ask you a question that we've often pondered about. Have you found within the area of new energy, because that is the hot area right now, and many entrepreneurs across the world are moving away from their traditional businesses and investing in this. Have you found any, sort of compelling uh, investment opportunities there?
So we haven't yet, but that is a very interesting sector. It makes sense from
So you all are
so many
examining it, is it?
points of view, and we are looking at it. Nothing concrete yet, but I think there is something that is very much up our street. So it
In
is
terms of new
something
energy, so you mean
in terms
hydrogen?
of hydrogen, in terms of just the whole play on environment, sustainability, ESG. all our businesses have been very committed to sustainability, and CO2 emission norms coming down. It's been sort of an ethos. So in that sense, it lends itself, to being invested in by us as a sector.
And when you said digital, what did you mean by that?
By digital, I mean,
Like anything could be digital,
anything
like that.
digital. I
Yeah.
mean, I'm talking about a digital,
No, so
purely digital play, which could be
so you're saying like
tech, it
like a
could be
suit.
fintech.
Oh, okay. It could be fintech as well,
I'm not sure yet, but why not?
or social media. Like Elon Musk wanted to buy Twitter. Are you interested in Twitter?
Huh. Good question, maybe.
No, I mean, so I'm asking you
It's
seriously.
sold already, and I couldn't afford it, even if
It's
I
not
was.
yet sold. She's still in the process of. Who knows whether the deal goes through or not?
But
But
I think there is space for one or two new businesses.
so that's what I
Uh,
mean. Like so, as dramatically different as
Not as
social media
dramatically
or
different
something.
as that, because I mean that would be too bold and too courageous. I don't think I have that kind of courage. But I mean something where we can play to win, where there is a right to win, as they say.
Okay. So e-commerce, that's what you mean? Because that would be a natural
E-commerce.
extension of some of your retail businesses,
So
right?
our fashion retail business is
So
looking at
already online,
e-commerce.
yeah.
They're looking at D2C.
So do you mean
I
something
don't
like
think
that or something
e-commerce is.
beyond that?
So I'm talking about, for example, digital in the lending space, or
Okay.
digital in the health space. Could be some very interesting opportunities.
Okay.
In the case of health, it also makes a social impact, so resonates with us very well. But these are all in the pipeline. It's just we're just on the drawing board and looking at different
Okay.
options.
In this plan, and this is not a capital requirement, but in your expansion plans and growth plans, where does financial services fit, Mr. Birla? Because I'm not sure if that business has performed to the extent that you would have liked it to.
I think
I
it's
think it's
performed
been.
well, frankly. I think in terms of performance, it depends on what dimension. In terms of profitability, in terms of growth numbers, it's done fairly well. But in terms of market cap, I think it's lagged. And we are very ambitious about financial services. Uh, I think we've got a couple of fixes. We've also understood better what our investors are looking for. I think we've got a lot happening in the next 2 years with fin services.
Could you elaborate on the fixes?
Inappropriate for me to talk about it at this point in time, but just um, essentially about growing faster and building scale faster. That would be the theme that I'd look at.
Okay. You're the country's largest cement manufacturer. You had the opportunity to become dramatically larger in one single shot with the potential purchase of Holcim, which was the second largest player. Though I do know, and it was quite obvious to everybody that there would be competition, complexities to that kind of transaction. Um, how do you look at the fact that it is now gone to a different Indian entrepreneur? Because there are many implications of how the competitive landscape changes here on.
I don't know what the implications can be, frankly. The fact is that these are existing assets on the ground.
Yes.
These are not new capacities being created.
No, they're not.
So to that extent, I mean, it remains unchanged. I don't know why a new player would behave irrationally, especially after paying the kind of price that he has. I don't see how it will change competitive dynamic in a very sort of
Well, I think
significant way.
I can tell you the way analysts are looking at it that, uh, traditionally or conventionally, MNCs have, sort of not been very aggressive when it comes to growth in foreign countries like India. And that was the case with Holcim. But now that it's an Indian entrepreneur, the growth push would be much, much harder in terms of additional capacities. I don't just mean via price, but
No, no,
I
no.
also mean via
Yeah.
market share and otherwise.
So I think we're very sort of entrenched in the business in a very positive way. We've been in the business for several decades now, very entrenched with the channels that form the ecosystem of the business, and we have our own growth plans. We have a large market share. Our brand, commands a premium, is loved by our consumers, and we have our own plan that we plan to go ahead with, as we would have even otherwise. It's always good to have competition. We've been used to competition.
sure, I
All of
just
our
meant
segments.
the expectations of a more aggressive level. Why were you not able to close this deal? Was it just competition complexities that
I don't think
discouraged?
this deal made sense for us financially. I think we have better options of growth, be it greenfield, be it.
So you mean the
Um,
valuation was too expensive to match?
of course, there would be CCI issues. I think those could have been resolved.
Are
Uh,
you saying the deal has been done at too rich a price for you?
Price
For
for
you,
us, yes.
yes.
Price is in the eyes
Price,
of the beholder,
of
but
course. So for you,
yeah,
I'm saying it's
for
this is
us, I don't think we could have created value
at this
as
price.
much as we can in other options that we're looking at.
Those other options would be greenfield expansions, I would
Correct.
think, right?
Greenfield and brownfield. Um, I mean,
So
we've
that
been in the business, like I said, so we have growth plans that we've been working on a continuous basis, so to speak.
Yeah, so I think that was my second question that, you know, will this spur you to more aggressively look at inorganic acquisitions in the cement space? And there are companies, mid-sized companies that you might be able to buy with fewer competition complexities to that extent. But given that the expectation is that here's an Indian entrepreneur taking over the second largest cement company in the country and will bring aggression to the marketplace, will that
If you
spur
look back at
you?
the growth of Ultratech, we've taken some very big and very
I know, I'm
aggressive
aware. Yeah,
bets. It's all about value creation. I mean, I don't think that we're going to start bidding for assets, uh, much more aggressively only because there's a new entrepreneur in the sector.
right.
That's not how it works for us. It must create value, and value creation is basically at the end of the day what matters. I don't think that we start bidding for assets completely irrationally only because there's a new entrepreneur in the bid. It just doesn't work like that for
Not
us.
only because I just thought maybe that could be one
So
more
at the end of
compelling
the
factor.
day, we are happy to pay. We have paid full price in several instances
Yes.
where we bought assets, but it was because we believed that we could create value out of those assets. See, at the end of the day, I think that's litmus test.
Um, do you do you foresee demand and pricing to remain robust enough for you to consider an inorganic strategy at all, or will it largely be greenfield?
So, like I said, we've grown through greenfield, brownfield,
I know.
and acquisition, not just in cement and other business as well. So it's about value creation. And if you believe in the India story, if you believe in the India infrastructure story, then I mean, prices will keep going up and down. That's never been a great sort of deciding factor for making an acquisition or not making an acquisition. It's a more overarching theme, so to speak. Um, so yeah, I mean, growth in the cement industry is something that we're very keen on. The route would have to be the one that creates the maximum value.
Okay. The one business that has struggled fairly publicly has been telecom. Have you put most of your troubles behind you with
I think we
the
put a
government
big part.
situation? Have you gotten a final response from the government on the equity allocation?
I think that's in the works.
Not yet
I think the
happened,
most
right?
important thing to do now is to tie up funding, for which discussions are happening with investors around the world. Not the most easiest to happen because the company, was in trouble, as we all know. Um, Therefore, it takes some time to get people to start feeling confident about a business like that again, which has been uh, kind of in dire straits. Um, but I think operational performance seems to improve quarter on quarter. Government package is a huge help for the entire sector. It's also a vote of confidence that the government has sort of signaled in the sector. So I do think the worst is behind us.
You will have to bring in promoter equity, right, Mr. Birla?
We've
Because
done that
no,
already.
yeah, but additional amounts,
So I think
significant
that
enough to draw more investment from other investors, because that has been one key thing that's been missing, right, for the last 2 years.
I think a lot has changed since then. So like I said, operational performance is much better. The government package is a huge investment, incentive for financial or a strategic player. So I do think that we're on the cusp of some good things happening there.
2 years ago, it seemed like you'd almost given up on the business. You're feeling encouraged now about this and to
Of
remain
course,
invested,
we never really
or
had given up, but we didn't want to invest in a business uh, unless we were convinced that there would be a return to that investment, at least a fair amount of return to the investment. There seems to be a turnaround now in the sector. Of course, we still have our problems because of the fact that the company had kind of, sort of deteriorated in many ways, as we know, and it takes some time to pull it back. I mean, that is a fact.
so you intend to remain invested in Vodafone? Idea?
Absolutely, absolutely.
No
The
plans now
intent
that once
is
you
to get
stabilize the business, you might feel telecom is not necessarily the best addition to your portfolio? The industry has changed dramatically from the time you first invested
So
in.
no views on that just now. I think that as of now, we're very committed. The intent is to find a financial partner or a strategic partner to come and invest in the company.
So tariffs have stabilized and therefore you're seeing improvement in operational performance. But your churn rates are still fairly high, Mr. Birla at Vodafone Idea.
They are.
I
So
don't
I'm
mean to
not
get
saying
into
that
a
we.
very micro conversation with
Uh,
you on a group company,
so I'm not
but
saying
I'm
we've
just
licked the
curious.
problem. I'm just saying that there's an improvement,
Yeah, sure.
and that's how you come out of the problem, right? You sort of see a quarter by quarter, month by month, year-on-year performance improvement. I see that happening as a trend.
Okay. I just wonder if this is a bit of a chicken and egg situation because investors are saying to the promoter and the government doesn't, sort of invest, or the government equity doesn't get finalized, we won't invest. Each one is waiting
I
for the
think
other
I
to
think it
move a
just requires
piece.
some more patience,
Okay.
um, and we'll have to see how things pan out. I'm very positive about it, but it's one of those situations where you can't make things happen. You just have to wait. That things will work out well, but I can't set a timeline to it because there are so many other
Moving
people and
parts.
agencies involved.
Okay. Your newest business call is Spain. So you've just doubled down on it, both in terms of capacity and capital. What are you hoping to build out? I know you've said before that this is a natural extension of your presence in a variety of adjacent fields like chemicals, etc. But
Chemicals, there's paints, there's white cement. I mean, there's cement and white cement.
so cement and white cement would help if from a distribution point of view. That's what you
Correct,
meant, right?
correct.
Yeah. Okay. And
So
chemicals would
I
help
think
from an
we
input point of
we
view.
aim to be a very strong second player in the next 5 years.
So does
Um,
JSW. Already there's Nerolac. There are many new players in paints in the last 4 5 years,
I
and two
know.
or three very strong existing players.
So having known that's our intent, that we believe we will be. We have every reason to believe that we will be a very strong second in the next 5 years in the business.
In your assessment, what will it take to become that strong second? Will it just mean, uh, large capacities and
So
large capital
capacity, of course, is a
investment?
given. You're talking about innovation. You're talking about distribution, technology, all of that put together.
And so, how much are you hoping to be able to invest over the next 2 to 5 years
So we've
in
talked
this
about. I think
business?
Rasim has talked about an investment of 10,000 crores.
Right. That's right
Um,
now just for the plant and the facility,
that
right?
that that includes the entire investment that Rasim will
So
make
for the next 5 years.
for the next 5 years.
Okay. Are there other new businesses besides this? I know you spoke of digital and new energy.
So nothing else that I can
Nothing else
talk
on the
about just
anvil.
now, Minka, but I'm sure there are things that will happen. Like I said, we have huge headroom for growth, and in a sense, we don't have an option but to look for new growth avenues.
You don't have an option.
So when you have that much of headroom on the balance sheet, if you're not growing, you're not utilizing your equity well enough.
But you can double down on some of your existing
That,
businesses
of course,
like
is the first priority.
metals
That,
or
of course,
retail.
that of course is the first
Because
priority.
even retail, you have stayed within a confined limit. You haven't really built out the business. The scale at which some of your conventional businesses run at, retail has come nowhere close to that.
So those,
Financial
of course,
services has
will
come
get
nowhere
built out
close
in
to
any
that.
case. I'm talking about um companies where the growth options potentially are far more than what you can do in the current business, so to speak. I'm not talking about. So let's not jump into the area of diversification. I'm just saying that the positive side to it is that we have huge headroom for growth. So we've got to find avenues to grow that are interesting and that you know give us the kind of return that we normally look for.
All right, we'll leave it there, Mr. Birla. Thank you so much for finding time here in Davos to talk to us. And we hope to be able to revisit your plans for new growth in a few months from now when you've sort of, finalized them.
Thanks, Mika. Thank
Thank
you.
you very much.